$20,000. That's how much the average homeowner spends every year on top of their mortgage payment. Most buyers have no idea it's coming. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Let me share what happened with the family I worked with. They were approved for a $2,200 monthly mortgage payment. That felt great. They felt great about it. House closed. They moved in within 6 months. They were stressed about money. Why? Because nobody told them about the other $500-$600 leaving their household budget every single month. Zillow just released a report that breaks down these hidden costs of homeownership, and the numbers are eye-opening. Nationally, homeowners spend nearly $18,000 a year beyond their mortgage. That's property taxes, insurance, utilities, and maintenance. And here in California, we're talking about some of the highest ownership costs in the country. In Los Angeles and Orange County, homeowners face an additional $1,610 per month in hidden costs, nearly $20,000 a year. San Francisco tops the charts at $22,781 annually in hidden costs, while even Boston comes in at over $21,000 a year. On the lower end, Josh, you'll love it. Las Vegas homeowners looking at just over $9,000 annually. I guess now I know why Josh is in Vegas. Now your lender does account for property taxes, homeowners insurance, and HOA fees in your pre-approval. Those are built into qualification process. But here's what catches people off guard. Maintenance, utilities, and those ongoing repair costs can eat up another $500 to $900 a month, depending on where you live and what kind of home you buy. We're talking about HVAC servicing, plumbing repairs, landscaping, those little fixes that become big expenses. 1 month it's a water heater. Next month, sprinklers. Then the garage door opener decides it's done. These costs don't show up on your loan approval, but they absolutely show up in your checking account. Think about that for a minute. 2 families here in California, same income, similar mortgage payments. Well, one bought in San Francisco paying an extra $1,900 a month in total ownership costs, while another in San Diego paying about $1,600 a month. The mortgage qualification captured the taxes and insurance, but the full monthly reality, that's a different conversation. This is exactly why I always talk about looking at your household blended interest rate and your budget. Where do you get that? Key Steps, rsrlinks.com/key steps, because what shows up on a mortgage application is affordable, might even look different when real life hits. What's not affordable, what's eligible, what's suitable. Most buyers focus on what they qualify for, but the smarter question is what you can actually afford to live with comfortably. That's the difference between eligibility and suitability. Here's a client story that illustrates this perfectly. Young couple, first-time buyers here in Orange County, came to me pre-approved for $700,000. The lender had done everything right. Accounted for taxes, insurance, even the HOA. On paper, they could handle it, but when we ran the numbers through what I call the household budget reality check and factored in maintenance costs for the type of home they're looking at, utilities for a larger space, the reality of Southern California living, that $700,000 home was going to stretch them too thin. That's why we have the Second Look program, rsrlinks.com/2ndlook. We repositioned their strategy, found them a home at $625,000 with a newer HVAC system, lower projected maintenance costs, and more efficient utilities. They kept $500 more in their monthly budget for living life and building their emergency fund. That's what suitability looks like. Remember, safety, liquidity, and return. If buying a home drains your liquidity and leaves you with no safety net for when the air conditioner dies in July, you're not building wealth, you're building stress. Bottom line, if you're thinking about buying a home or you're wondering whether you can afford more house than you currently own, let's have a conversation about the real numbers. Not just what you qualify for, but actually what makes sense for your household budget. Again, visit rsrlinks.com/key steps to get your financial house in order before you start shopping. We'll look at the complete picture, including all costs that don't show up in your loan approval, but absolutely show up in your monthly life. Because here's the truth. Strategy beats rate always, and the best strategy starts with knowing every number that's going to impact your household budget. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. That is the Borrow Smart segment, brought to you by GetHomeSelect.com.